Hey everyone, it's a quick sound check and we can get started. Let me know if the audio is coming through okay, everything is alright. Welcome to the busiest week of the month. Okay, audio seems to be good on my side. We are going to start our session. This is news trading session number 2. So this is going to be talking a little bit about theory and practice. My name is Vida Injara and we can get started very soon. Just want to clarify a few things. This is news trading. It's not fundamental trading, yeah? So this is not fundamental analysis. This is how we react to news when it gets released. That's basically what we're trying to focus on. Some of the tools that we can use to trade the news. That's basically what we are going to be talking about. We're not really into the fundamental analysis side of things. This is really in terms of if there is, a big impact news coming out like tomorrow, which we are going to do a live session with together. It's going to be the CPI, the US CPI numbers, and how do we react around those news releases, like those high impact news releases that move the market. That's basically what it is that we are going to be covering on tonight. Okay? All right, just before we begin, just a quick disclaimer. Any opinion, news, research, price analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. All right? Pretty easy. You got a couple of bonuses for participants. Obviously, you got your promo code TW deposit bonus, which I will share at the end of the session. And then if you register through email, you should be receiving your private Telegram channel invitation via email. All right, we're not going to do that here, but yeah, those are going to be what it is for today. Okay, so what are we going to cover on tonight? We're going to take a look at the advantages and disadvantages of news trading. Some of the most profitable news trading, all right, or the most volatile news trading that we can take a look at. News trading and price actions, how do they relate? What happens before, during news releases, and after news releases? Some general rules to go through for news trading. Buy stop and sell stop strategy, which is something that we already touched on during the NFP numbers. This is probably something that we are going to employ for tomorrow's CPI number as well. But if it is around some key levels, then we do want to have our buy limit and sell limit strategy as well. So we'll go through the buy stop, sell stop, and then we'll go through the buy limit and sell limit as well. Okay, that's going to be a question at the end of the session, so pay close attention to what it is, and let's get started. All right. This is the promo code that you can use. This is TW deposit bonus. It's non-farm 2023. It is valid until 17th of May. We're past 17th of May, but the code should still be valid. Just use the code. I think we just haven't updated the promo code, the validity of the promo code. But let me know, Team Octa, if there's any changes to this one here. I didn't get an update, so I was just using the old slide for this one. This one was for the previous month, but I think it should be the same code. It should be non-farm 2023, right? Okay, so let's take a look at some of the advantages and disadvantages of news trading. A couple of disadvantages that I will add on later on, but let's take a look at the advantages first. You got all the necessary information can be found in the economic calendar, so there's no need to delve deeply into the technical and fundamental analysis. That's number one, right? So we know when the news are going to get released and stuff like that. What are the estimate for the, so what are the estimation for the release, the consensus, the forecast, we'll get that on the economic calendar, okay? So access your economic calendar. There are a couple that we can use. You can use Forex Factory. You can use, I like to use Trading Economics. I like that a lot more. But you can go to OctaFX website and use the economic calendar in there as well. It is accurate and it's pretty good. All right. Events and calendars are ranked in order of importance, which helps you to make adequate decisions. Like for myself, I don't really quite care about some of the low impact news, medium impact news sometimes, but the high impact news, either you avoid it or you trade it, right? So you kind of know which one has the biggest impact into the market, what it's going to create volatility into the market, what is not going to create volatility into the market. So you can actually filter those out as well. All right. Publication of statistical reports noticeably increases the volatility, and traders can earn large sums on it if you get it right. Obviously, if you get it wrong, then yeah, it's also bad for you because of the increased volatility. Now, in terms of strategy, when it comes to news trading, it's really limited to those buy stop or sell stop. Just if purely considering the news releases, not factoring all the other technical indicators or fundamental analysis that we can actually do to help improve our trading. It's a very simple strategy, right? So it's the simplicity of a strategy. You basically don't have to learn complex mathematical formulas. You don't need to learn complex mathematical formulas or to draw the most complicated shapes on the chart. You just need to be able to make a trade and close it. It's just that simple. Excluding all the other context that I just said about the knowledge of having the knowledge of technical analysis or fundamental analysis, which is going to help greatly into your trade if you're able to have that capability. But some people just don't care. They just want to trade the news. News goes in one direction, they'll just go with that direction in preparation for that breakout. That's basically what it is. Okay, so minimal time expenditure on trading, because you know exactly when to go to the trading platform and what to do. And best of all, the trading process itself can only it takes only a few minutes. In fact, it's only a few seconds. Okay, but for example, with the CPI numbers tomorrow, right? You know what time it's going to get released. If you go to the economic calendars, depending on where you are, I don't know where you are, but depending on where you are, typically with economic calendars, you can actually set it to your time zone, so you do know the precise exact time the news get released. So all you need to do is just stand by in front of your computer, maybe 10 minutes before it, like what we did with the NFP. We basically just spend about 5 minutes setting up our orders and stuff like that, and that's pretty much it. We'll leave it to the news once it gets released. Now let's talk about the disadvantages, right? It's not all the time that the market situation develops the way logical thinking and common sense predict. Now, this is what I'm trying to separate from what it is. News trading and fundamental analysis are two completely different things. Okay, news trading might seem like it's fundamental analysis or it's based on fundamental analysis, but it's not. If you take a look at news trading, but if you have that knowledge on fundamental analysis, that's going to greatly improve the context of what that news releases is. Okay, so sometimes it doesn't make sense. Let me give you an example. The NFP last week, not last week, the NFP 2 weeks ago, right? When we did that was on the 2nd of June. There were two numbers that came out, right? The NFP was, really good, surprisingly good. I think it was an additional 159,000 jobs per month. But the unemployment rate was so bad. It was from 3.4 to 3.7%. What doesn't make sense here is that we're dealing with two set of data. One good, surprisingly good, one surprisingly bad. The market needs to make a decision on which one they think is the right one. So, obviously analysts and traders are going to argue. But the initial reaction was pro the better NFP numbers. Okay. But traders like me that knows the fundamental analysis side of things will actually look at the numbers and say, look, this doesn't make sense because the US dollar shouldn't be gaining like that because the unemployment rate was pretty high. Okay, but it took about a week before market realized what happened. Not until last week's weekly unemployment numbers that they realized, oh yeah, the NFP might be wrong. The unemployment numbers was probably the correct one to go with. And that's where we see a little bit of a reversal going on. And without this context, the weekly unemployment numbers, for example, last week, wouldn't cause a lot of impact. But because of these two differing numbers that we get from the NFP numbers, it was something much, much more significant. The US dollar loses a lot of strength last Thursday. Okay? Now, not all news can cause any reaction at all. As I said, without the context of the NFP and the weak unemployment numbers from the US, the weekly unemployment claims usually doesn't create that big of an impact, but it created a huge impact last week. Okay, so people that come in, trading the weekly unemployment claims, they were like, oh yeah, this is like a weekly number that got released, so it's not really that important. Maybe I'll skip that one. If you skip that, kind of lose out a lot because it really moved the market significantly. Okay. Final CPI numbers, for example, on the euro side, it's a final inflation number, but it typically doesn't cause a lot of reaction because a lot of traders are trading the flash inflation numbers or the preliminary inflation numbers from the eurozone. Okay, so you need to know what news is going to trigger that movement, what news is not going to trigger that movement, and stuff like that. Okay, if you don't guess the direction or even analyze the situation correctly, you may experience a significant loss, because if you take a look at what's on the advantage is that it creates a lot of volatility. If you didn't try and figure out or use something else to figure it out and just blindly trade the news just with simple orders, can you do it? Yes, but the probability is not that on. It's not going to be on your side, because if you get it wrong, you could be dragged on very, very quickly, and it could generate a lot of losses in a very short period of time. Okay, so that's the advantages. That's the disadvantages. Okay, and also the other things that's not in here. Some of the disadvantages on trading high impact news is that you typically get a lower liquidity in the market, which means sometimes the spread widens up. Okay, it widens up. Sometimes in terms of your order getting filled, it might take some time for your order to get filled. So those are something to consider as well. And if you're in a situation where you don't actually have a good internet connection and you're trying to trade the news, I would say please do not do that, because if you don't have a good internet connection when trading the news, which is really more of a muscle reflex in terms of opening or closing the order, if you don't have a stable internet connection, just don't do that. Okay, make sure your internet connection is stable. Okay, so what are the most profitable news for trading? I don't like most profitable news for trading. I would really like what are the more volatile news for trading. I think because as a trader, we want the market to be volatile. Like last week, the market wasn't volatile. It was a pretty boring week, and to a lot of us traders, it was a nightmare fuel because the market wasn't going anywhere. Okay. Anyway, news that we are talking about is divided into two different categories. Number one is hot. Right, this is something that's unexpected. Could include terrorist attack, military conflicts, natural disasters, and at such moments, the national currency becomes much stronger as investors get rid of stocks which are about to fall. That's typically what happens, right? So we have a little bit of an interconnection with the equity market as well when we talk about the currency market. Okay. Maybe if I were to give you an example, if you guys remember the Japanese tsunami that happened, I believe it's 2011, if I'm not mistaken. I think there were a couple, but I'm trying to figure out which one is it. It is, but I think it is 2011, if I'm not wrong. there was some repatriation to the Japanese yen, so the Japanese yen actually gets stronger, and there were stocks that were being dumped in the Japanese stock market and then converted into the Japanese yen, so it kind of boosted up the Japanese yen. So some sort of situation like that, it does fuel things up, right? The conflict between Ukraine and Russia, it pushes the energy prices up, it pushes oil up. Those are some of the unexpected news in the market that could potentially happen, right? And then we get our periodic news. This is something that we are scheduling every day, every week, right? It comes out regularly at quarterly reports for the companies if you're trading stock market, and everything else that goes along with it. For example, this week we've got central bank meetings, monetary policy decisions. We know when it's going to happen. It's going to happen on the 14th for the FOMC, 15th for the ECB, and on the 16th for the Bank of Japan. Okay, we know that's going to happen. Quarterly GDP numbers. We've got the UK GDP numbers. We've got New Zealand GDP numbers this week. So all those are scheduled by the Bureau of Statistics in every country. Those are pretty much scheduled, right? We've got CPI, PPI, the core inflation. We've got PCE, personal consumption expenditure. Those are scheduled. We know the CPI is going to get released tomorrow, and we're going to be trading the CPI that's going to get released tomorrow at the same time during this webinar times, right? Indexes of business activity in manufacturing and services. This is the ISM manufacturing and ISM manufacturing PMIs and ISM services PMI numbers that we saw from the US 2 weeks ago for the manufacturing numbers and services last Tuesday, I believe, last Monday actually, right? Then we've got the unemployment data. This is the most focused unemployment numbers. Obviously, this week we've got tomorrow we've got the UK claim and count change. We've got UK unemployment, and then on Wednesday we've got the Australian unemployment rate. Those are something that you can trade if you're trading the pound or the Aussie. But typically every month we focus more on the US unemployment side. So when we talk about unemployment data, probably the most popular one that moves the market is going to be the US employment numbers, which includes the NFP numbers, the unemployment numbers, and the average hourly wage. All right. So those are some of the news to watch out for. The key news to watch out for, I would say, would be the monetary policy statement every month. That's something you need to watch out for. The unemployment numbers, something to watch out for. The CPI numbers, those are something to watch out for. The PMI numbers sometimes move the market, sometimes doesn't move the market, depending on what the market needs. The GDP numbers is typically going to move the market, but really depends again on the context. If the traders or market participants really look at the GDP numbers, right now, for the US GDP numbers, it's not really that much of a concern. But for the UK, the GDP numbers, it is a concern, because whether or not the UK economy is going to go into a recession, that would be justified by what the GDP growth rate is going to be. Okay? Right. So those are what to look out for, what you can look out for. Okay? But, here's a rough sketch of what it looks like before news releases, during news releases, and after news releases, right? So typically we get a period of consolidation as we come closer and closer to the news releases. Okay, the market's just going to consolidate. It's going to create a small range. This is because a lot of people are actually sidelining the market. They don't want to open a position yet. They're just there standing by, getting ready. If there's a breakout, people are just going to buy in or sell in, right? But, pre-news, people are just going to be on the sideline. Because people are on the sideline, we have a little bit of a consolidation phase. We have a smaller range in the market. It's very normal leading up to a news release, which is good for us, because that consolidation phase means we can actually create a barrier to what the price is. We'll know the floor, we'll know what the roof is, we've got our support, we've got our resistance. Break those support and resistance, and the market goes in a certain direction. All right. And then when the news get released, everyone's going to take time to digest what it is, but typically with news trading, you don't need to digest what it is, okay? Because there are several ways we can trade the news. You can trade the news during release, you can trade it before release, you can trade it after the release, all right? But the development phase that happens are going to be traders that don't really quite care what it is. Typically, they are scalpers, could be quants, could be AI, so bots doing it, right? But basically, that's going to be the development phase. That's where market gets driven in one direction, and then once everything calms down, the market is actually going to, kind of calm down a little bit, right? And that's where we get our termination phase. Now, the termination phase obviously depends. When is it going to end? Because the termination phase during the NFP last week didn't quite end on the day itself. It just goes on and leads up all the way up until Monday and Tuesday, right? Especially bad for the sterling. But anyway, these are the three typical phases that you see. We got our consolidation, we can create our ranges, development phase or breakout phase, and then the termination phase where the market comes down. This is the time, if you are there just for news trading, that's where you want to get out. All right, so you want to prepare yourself during consolidation, get your orders, development phase happen, you're in or you lose, right? And then you get out during the termination phase. Now, some general rules for news trading, obviously. Study the market and the dynamics of a currency pair. I cannot stress enough how important it is. For example, the FOMC tomorrow, the CPI number tomorrow, sorry, not the FOMC, it's going to impact the dollar pairs first. Now, obviously, the dollar pairs are going to react differently. The Aussie USD, the Euro USD, and the sterling, they might work in a different context. Okay, the sterling probably moves a lot more than the euro, and the Aussie probably less than what the euro and the sterling is. But you need to know what are the characteristics of the currency pair that you're trading. How do they react to news? Do they really react violently in a more volatile way compared to another? Every currency pair doesn't react to the news the same way it is, all right? You can also study the reaction of a currency pair to that latest news releases, all right? And then you need to prepare for your trading, which is marking the levels on the chart. Decide on your tactics or your strategy. When do you want to open it? When do you want to close the order, which is setting up your stop losses, your take profit levels, your entry levels, right? Are you going to be doing a limit order? Are you going to be doing a stop order? That kind of stuff. You need to figure it out beforehand. And then you need to choose a working time frame. I'm a 1 hour guy, but intraday trading for news trading like this, I would typically go with the 15-minute time frame because I need to make a decision as quickly as I can. Within a short period of time, I need to know where the market direction is that is visible to me within the first 50 minutes. I need to know what the momentum is, because if I don't do that for the first 50 minutes during news releases, then I'm going to miss out on that extra 45 minutes waiting for the hourly candle to close, for example, right? So you also need to determine the maximum risk of a trade. Think about your stop loss and trading stop if you want to use it, but also this is really more on the risk management. This would be your capital risk, this would be your trade risk, but you just need to know what is the risk that you're taking on that trade. So don't just blindly open a position without knowing what you're risking. I think that's very dangerous, especially for news trading, where we know it's going to be volatile, where we know the market could go in your favor or could go against you. All right. Decide on the terms of the deal. Will it be a quick trade, or is it going to be a long-term one that's going to last you more than an hour, a day, a week, right? Make a decision based on what you want to do. Okay, because a lot of this news trader, let me just give you a little bit of a pointer. A lot of this news trader jump in and they will close out the position as soon as they see, enough profits, or something that I say, all right, I think that's pretty good, for just a quick few minutes. I think this is okay. You could deal with that kind of strategy, or you could say, you know what, I'm targeting something else because of my technical analysis. I've got my target level set. Then do that, set it. But just so to be clear, you know what you need to do, whether you're going to be there just for the short term. If you don't know anything about the market, right, I would say just be there for the short term, get in, get out, and be done. If you know what you're doing, you've got your very specific targets, then yeah, you can stay in that trade for a longer period of time. Okay? All right. So tonight we are actually going to be discussing pending orders. Okay, so we've got buy stop, sell limit, sell stop, buy limit, but let me just start slowly. Let's take a look at the buy stop and the sell stop. This is something that we discussed during the NFP numbers, and this is the straddle strategy during the NFP numbers, right? Buy stop is basically just order placed above the current market price. If price is rising up, it'll hit your buy stop, then it'll trigger a long position for you. You're in a buy. Okay, that means you're expecting the market to go up. If you expect the market to go down, then create a sell stop. And once it breaks through the support level, your sell stop gets triggered, then you're in for that short trade to the downside. Now, the sell limit and the buy limit are a little bit different. If you think the market is facing a little bit of a resistance, and you think that resistance is going to hold, and you want to get the best entry possible to, or the closest entry possible to minimize your stop loss, then you could set a sell limit at a resistance. So you, in anticipation that the market's going to go to that resistance and then get rejected, and then the market's going to go down, right? So you want the market to go up, pick your order, and then it's going to go down. The opposite is true. If you think there is support in the market, which I think I can probably bring in an example soon, right? On what a potential key support looks like. You could set a buy limit if you think that the market's just going to drop down a little bit, find buyers in the market, and then it's going to bounce back up. Then you can create a buy limit order. Okay? All right. So buy stop, sell stop. Let's talk about this one first. This is something that we actually use during the NFP numbers. Very simple, very similar to what the straddle strategy is. Basically, we've got what we call a corridor of volatility, or pretty much where the market kind of just pauses for a little bit. Okay, so it creates a little bit of a support, it creates a little bit of a resistance, and then you can create a buy stop. If you think the market is going to break to the upside, you create a buy stop. If you think the market is going to go down to the downside, then you create a sell stop. Typically with news trading, we create both orders. We create a buy stop orders and a sell stop orders. Whichever order gets hit will cancel the other order. Okay, but this is something that you do during the consolidation phase. Make sure you only do this during the consolidation phase. If you do it after the news gets released, it kind of defeats the purpose, okay? Because that means you already missed out on the initial break or the initial run that happens in the market, okay? And if that's the case, then it's just best to do it manually. But this is, if you're getting ready for the news, let's say you're looking at the Euro USD, the Pound USD, the Dollar Yen, the Aussie USD, you're looking at 4 or 5 different currencies. Obviously, when the news get released, you don't have access as quickly as you can to all these 6 currencies, right? So you create a buy stop, sell stop order just in case you don't have the time to kind of go to each of them and click that buy and sell order. All right, so this is what happened when the news get released, or the development phase, right? We'll see that initial run to the upside. Your buy trade is going to get activated, and you need to cancel out your sell stop. And that's basically just the case. Otherwise, if the market goes down, you're just going to get hedged, right? So we don't want that to happen. So if you got a buy stop, which gets triggered, for example, like in this example, right? A buy trade gets triggered. Then you want to cancel your sell stop. Simple as that, okay? All right. So once the market rallies up, and it goes out really high, you can then move your stop loss to your break-even point, or maybe lock in a little bit of a profit. And that's basically how we trade the news, right? We don't know when the market is going to reverse on itself. Typically with news releases, sometimes the market does return, sometimes it fades, like the NFP. About 80% of the time it reverts back to that breakout level before continuing on. But with the CPI numbers, typically it just goes in one direction then and don't look back. Okay, so but just in case if the markets run up, there's a lot of profits running for you. You might want to move your stop loss to break even, just in case if it goes against you. At least you're not losing out. All right. Okay, so let's practice. Okay, so a couple of things here. For example, on the pound USD, we've got a very interesting level to look out at here at 1.2550, which is, we're going to go back to that 1.2550 level very, very soon. But let's assume on the 1 minute time frame, we're not really looking at anything that's kind of range boundy at this point in time. But just in case, if we take a look at this one here, maybe we would consider this as a potential resistance for the pound USD. And in terms of support, we've got 1.2556, right? We can create a I need to go a little bit lower, I guess. Yep. So I can create a sell stop, for example, at 1.253. All right, and I can create a buy stop just slightly above 1.2570. All right. Obviously, there's no news at this point in time. I don't think there's any news, but just let me check. Pretty sure we don't have anything right now. So yeah, we don't have anything at this point in time. So the market is currently moving, not because of news, really more on the leftover sentiment from last week or whatever, but it is moving technically. But just in case, this is an example. If we are to assume that, all right, this is what happens pre-news, and in 5 minutes time or 15 minutes time, that's going to be a breakout. All right, we can just set our buy order or sell order there, and we can come back to that later on. Euro USD, Euro yen, dollar yen. I'm not looking gold. I'm not looking at anything that's something that we can actually trade gold a little bit here. There's a little bit of a support hold for gold right now. Maybe we'll create a sell order, a sell stop. All right, maybe just slightly lower, about 1960.50. All right, so we can create a sell stop over there. In terms of buy stop, we can create a buy stop just slightly higher, above about 1966. All right, so we'll see what happens. What is our place? Let's go back to our slides, but it is what it is. So for this one here, I do anticipate the support to be broken, at least for gold here. Again, this is only on the 5 minute time frame, so this isn't something that's not significant. If we go into the hourly time frame, then we actually don't see anything, right? If we are looking at it from a different time frame, on a higher time frame, on the hourly time frame, for example, to trade gold, then logically your buy stop order would be a little bit higher. You really want to have it closer to about 1968, right? Your sell stop should be about 1956. But this is just an example because we're looking at it on a 5 minute time frame. We just want to show you what happens if an order gets triggered. Simple as that. Okay, but let's move on. The other one is actually a buy limit and a sell limit strategy. And this is probably something that we can actually deploy for tonight. Okay. So if you take a look at your previous high levels, then that's where you need to know where you put your sell limits, right? We typically call this an order block. We basically see the market, how it reacts to a certain price level, and we basically just box it up. We'll create a block, all right? In this case, we see a lot of resistance building up. So we want to create a sell limit around those levels. It doesn't have to be perfectly perfect because there's no such thing as getting a perfect entry into the market. But just be reasonable. If you want to get the best entry, obviously you want to have you'll have your sell limit at the highest resistance, but if you just want to get in very quickly on that, if you're anticipating a little bit of resistance on the order block, then you can create a sell limit. Okay, the market goes up, picks up that sell limit that you have, and then it goes all the way down. It's just as simple as that. So if you still expect the market to go down, but you kind of think, okay, I think you know what? I think there's a little bit of a correction in the market. I think the market could go up a little bit. It might be a good idea to create a sell limit or pending order when the market goes up. It's going to trigger that sell for you. Okay, so this is something that we are going to employ, obviously. All right, and I think I would like to employ this on the 50 minutes on the pound USD. So for the pound USD, let me just cancel the order stops that we have, right? Because if we were to look at the pound USD, there's that level 1.2550 that we need to be worried about for the pound USD. Now, that 1.2550 level, if I were to zoom out, okay, was basically an area where it becomes a resistance. It was very tough to break in terms of the significance of that. And if you take a look all the way back, all the way to last week, this was basically the level to watch out for, because during NFP release last week, price didn't actually break through 1.2550, right? So we need to be a little bit more cautious of that level. So 1.2550 all the way down to about 1.2540. Oh, sorry, is that 1.2540? Or is that a little bit lower? 1.2535, right? But these are going to be our, a suspected support area for the pound USD. Obviously, there's going to be two scenarios for this one here. Do you think the market could potentially bounce off 1.2550? On a shorter time frame, potentially yes, right? Because on a shorter time frame right now, if we take a look at the 50-minute time frame on the momentum, it is about to turn. So it might actually bounce above 1.2550 first on a shorter time frame. So I'm going to create a buy limit at 1.2550 instead of a sell order, because I anticipate the market, if it touches 1.2550, we might see price bouncing back up a little bit. Okay, just in case. But this is the scenario that we're looking at. However, if it does break lower below that order block, then I want to have my sell stop just below that order block. I would have it at 1.2525. So if I were to zoom out, I got two scenarios here. If price bounces off 1.2550, then great. I've got a buy limit order that gets triggered, and I can have my stop loss at where my sell stop is located. The reason why I have that sell stop is just in case the support gets broken, price continues to break below that support level or below that order block, then it's likely going to trade even lower. So I created a sell stop at 1.2525 just in case if it breaks the support that we have at 1.2550, we would reverse our position, and I can leave this alone. I can go to sleep right now because I don't quite care. I got my buy limit, so it's going to trigger my buy. I got my sell stop just in case it breaks my support, okay? But just make sure that you also set your stop losses. So for this one here, I've got my buy limit, all right? And I'm going to have my stop loss at 1.2525, okay? My take profit, I would go 1.26, right? So I got that modified, so I already have that in there. Okay, so if my sell stop is going to get triggered, then I also need a stop loss, right? And what is my stop loss going to be? Well, I think my stop loss needs to be at 1.26 because that's the level that the market has never reached. So in terms of target, where do you think this is going to go? If it breaks below 1.25, 1.2525, then I think it's going to go to 1.2450. So I got that in place, and that's it. I'm just going to leave it as it is. But that's how you create, a buy limit or a sell stop in the market. Okay. What is a floating profit mean? If you're, if you have a position and you're profitable, that's what we call a floating profit. Anything that you haven't closed, it's still floating. It can still change. It could still gain or it can get less until you close that position. You don't realize that profit. Okay, so make sure you kind of realize that profit if you want to take it out of the market. Okay. All right, let me just grab a drink while I'll go through the chat just in case if there's any questions. Can we rank the effect of each news? Which one creates more volatility? I noticed GDP numbers doesn't do the market that much. You're not wrong on this one here. We don't look at GDP in terms of importance every single month. We look at the quarterly GDP every quarter. Okay, so January, typically in April, we'll focus on the quarterly GDP. This month's GDP, not really a focus. We'll focus on July's release because July's release is basically just going to encompass the second quarter for 2023 and so forth, right? So not every release are important, but it is still considered to be a high impact news because it does create volatility in the market as well. Do we use the sell or buy limit for fading? Yes, you can do that, right? So if you fade the market, if you join in on the NFP numbers or the NFP session and you want to fade the numbers, that's where you want to do the buy limit and sell limit. Yes, you can do that, right? So you can trade against the initial release reaction of the NFP, for example, to trade the fade if you want to, or if you want to wait for the fade, then yes, that's where you use the buy limit or the sell limit orders. Can we combine both techniques during news trading? First, buy, sell, stop. We take profit if we're right, and then buy and sell limit. If we can fade the news, yes, but not for every trade, I guess. Can we explain a little bit back about sell stop and buy stop? Sure. Okay. I'm just trying to find something here because help me out here because I'm not seeing a lot of volatility in the market, at least not right now. But I think if we take a look at the dollar Japanese yen, we'll take a look at these two ranges here. All right, if you think there's going to be support building up around 139, which is about there, and then if we take a look at the resistances building up, it is at about 139.40. So, just judging by the current condition, what I'm thinking for this one here is that if I think price is going to break below 139, so I'm going to set my sell stop below 139. So once price breaks below 139, we could see, the support get taken out, and we anticipate the market to trade a little bit lower. If we don't know what it is right now, because look, there's no news at this point in time, so it's going to be a little bit tough. But it doesn't matter as long as you got your ranges. You know what to do. For example, on the dollar Japanese yen, you can create a buy stop and a sell stop. Maybe I'll switch here and give you a little bit of an illustration on the dollar Japanese yen here, maybe on the 50-minute time frame. But here, let me give you an example. All right. So let's take a range. Let's see what can we do here in terms of determining a range for the dollar yen, for example. Right. So let's take a look at the dollar yen. Actually, I probably need to go in here. Just hide this. I need my sessions. I'll hide Ichimoku. All right. I'm good with just the sessions. Okay. So let's take a look at the sessions here. So assuming during the Asian session, we've got a low there. And during the UK session, we've got a high there. So actually, the low is actually here, right? So you can create a sell stop around here. So when it goes down, it triggers it, and then it runs down. Or if it breaks and you anticipate that pullback to test that support to be broken, you can create a limit order. Okay, but either way it works. If you think the market is actually within a tight range, all right, for example like this one here, right, so you can create a buy stop and a sell stop outside of that range. That's basically what it is. It doesn't have to be news releases. It's actually just simple price action, but we need to understand where it will function, where it won't function as a sell stop or a buy limit. Okay, so going back to the pound USD, for example. So I'm just going back to the pound USD here. There's a, sorry, are we looking at pound USD? Yeah, we're looking at pound USD. So let me just delete that. Okay, so with the pound USD, the reason why I'm more towards a buy limit order rather than a sell stop at this point in time is that if we take a look at the movement today from Asia until about an hour past UK, we are very close to support level. And that support level is actually 1.2550. It's somewhere between 127.2 and 161.8%. Now, obviously, if we take a closer look, zoom out a little bit, the support level that we have is actually just somewhere around there, right? In fact, we can actually, consider this as a potential area of support for the pound USD. But I want to get in a little bit early because I like psychological price level. I want to get my orders at 1.2550. So what I'm anticipating for the pound USD, for example, is that if it goes down to 1.2550 or maybe even lower, I anticipated the market to actually bounce back up again to test this support area that we have around here. All right, right around there. Okay, we basically just want to see the market, return to that level because it's broken through that level and we haven't seen a retest on that level. So with that anticipation on a shorter time frame, let's say on the 15-minute time frame, price could go all the way down to 1.2550 and then it might bounce, it might correct itself a little bit higher towards 1.2565 just in case, right? Because if you take a look at the momentum here, it does looks like it could potentially become oversold. It's not oversold yet, but once the stochastics crosses above 20, then I think the buy limit trigger would be a better scenario than a sell stop for the pound USD if you take a look at it on the 15-minute time frame. However, if we go on to the hourly time frame, then it is a completely different scenario. Because on the hourly time frame, if we lose that support at 1.2550, we could potentially go down a little bit lower for the pound USD. So depending on the time frame that you look at, obviously it's going to work differently. This is also going to apply to when you look at the news, right? What is it for? Are you in there just to go in, get out, or are you going to stay in for a little bit longer? Depending on the time frame that you use, you might use a buy limit or a sell limit. On a small time frame, you typically go for that breakout strategy. You'll use the buy stop and the sell stop orders. Okay. All right. So let me go through that. Well, yeah, Albert just basically just answer it. It's basically just a pending order. If price hits it, you automatically opens the order. No, as explained, take a screenshot of this one here. A buy stop is an order. If you expect the market to go up and it hits your buy stop, it'll open a buy position for you. Okay. If you have a sell stop, that means you anticipate the market to go down, and if it hits your sell stop, it'll create a sell order for you. Okay. The buy limit is if you anticipate the market to go down and then bounce back up, that's where you have your buy limit, right? Instead of having a short position or a sell position, once price goes down and hit your buy limit, it will open a buy position for you. Likewise with sell limit, if the market goes up and you have a sell limit, If it hits your sell limit, it will open a sell position for you. Okay, so that's just the the difference between buy stop and sell stop, and the picture tells it all, right? A buy stop, you see that line, it breaks that line, that means you go in that direction. You're buying, or you have a pending order in that direction. A limit order is that you see a certain support or resistance, price gets to it, you anticipate the market to reverse. That's where you use that limit orders. Okay, as a swing trader, having a bias on news pair just before the news, can I trade the news just like the news traders do? And if this news favors my bias, then I leave it for swing trade? Yes, that's basically what I do. So for the CPI tomorrow, right? What are we anticipating for the CPI tomorrow? Let's bring in, I'll show you the calendars. Okay, just this week. Let me just filter out a few stuff. Nah, you know what? I'll just bring it over. Okay, so, oops. All right. Come on, don't like on me. Okay, right. I'm gonna filter this by countries. This is something that you can use. This is trading economics. Right, I need Australia. Yeah, I don't need Brazil. Do I need Canada? I need China. Yeah, I don't need Indonesia, India. I don't need that. IMF. I don't need that. Germany. Yeah, I need that. G7, G20, Euro area, Japan, Italy, Russia. I don't need it. OPEC. Yeah, I need it. Turkey. I don't need it. South Korea. I don't need it. South Africa. I don't need it. Singapore. Don't need it. Saudi Arabia. Don't need it. Mexico. Definitely don't need it. UK, US, and everything else. Yes, I need it. All right. So. If I don't filter the impact, there's a lot of stuff going on, right? Especially on like Monday, you got your bond auctions going on. See how the bond auction happens. It doesn't really impact the market significantly, right? So you can sort it out by impact. Like even the Japanese PPI number doesn't have that much of an impact. It gets released in the morning. By the way, I'm on UTC +7. But if you guys are somewhere else, then you can just obviously adjust that. Okay, so you can filter it by impact. If you really want a high impact news, then that's it, right? You got a lot actually this week, but it's all gonna start tomorrow. You got UK claiming count change. You got your unemployment rate. You got your business confidence. Business confidence, even though it's marked as a high impact, it typically doesn't. It's something that I typically ignore. Okay, so, but let's take a look at the CPI number, for example. So with the CPI numbers, I need to bring out a medium impact because we are looking at 4 set of number, which is something we're going to talk about tomorrow. But for the headlines inflation number, it is 4.9%, and the expected consensus is 4.1%. Okay, so we also have forecast over here. Now, what forecast and consensus means is that the consensus is actually polled by typically Reuters polled it, all right, and then it becomes a consensus. Now, it only takes a few economists to do that, but then we got a forecast where there's a lot more people that's actually being tallied into the consensus. So, the way we read it is that we expect the CPI number, we expect the headline inflation number to drop from 4.9% to 4.1% tomorrow. If, however, the CPI doesn't meet its expectation, it doesn't go to 4.1%, it comes in at 4.8 or 4.7%, then the market might react differently. It is still a drop, but the market will react in a way that they think the FOMC might need to hike interest rate on Wednesday. So it really depends on the context, okay? Now, can we use that to our advantage? Yeah. If we have a long position on the pound USD and the inflation rate drops down below 4%, for example, if the inflation rate drops below 4%, then it's a definite thing that the FOMC doesn't need to hike interest rate this month and next month. Okay, just saying, would that be beneficial for our pound USD trade if we have a long position? I think so, yeah. initial reaction to the market, would it be better to go long pound USD? Yeah, it would be better to be long pound USD. And if it's such a significant drop, can we transition that into a swing trade? Yes, we could. Okay, because we have the expectation that the FOMC is not going to do anything for June and July, and they're going to come out with a statement saying, hey, you know what, we look at the CPI numbers, we got inflation, it is below 4%, we're really surprised, then, you know, here's our economic projections. I think we're not going to be, you know, rising interest rate again going forward into the future. So that could be the case. So yeah. If you're not able to find a correct entry price based on the charts or our buy sell stop orders for new trading, what would be the MPIP we should set for our orders? Let's take USD currency. Last CPI news trading for Doja, we took 200. What is MPIPs? I'm not sure what MPIPs is, but yeah. Well, I'm waiting for the answer. I'm not getting anything triggered because we have our orders here and there and we're not really looking at it. I think the only closest thing would be a buy limit. Micro pip. What is a micro pip? Because pip is already pricing point. You mean like the fifth decimal? So if we talk about 250 micro pip, is 25 pips. Is that that's just my assumption, but I've never heard of micro pips, but yeah. But taking a look at example on the last CPI news trading for the Dow Japanese, we took 250 micro pips since the chart reference points was too far. Last CPI numbers. What was the date for the last CPI number? But let me just hold on. Let me get my manual flip calendars. When did we do that CPI numbers? Oh, we did that on the 10th of May. So let's go back to the 10th of May on the Dow Japanese yen. So yeah, so 250 micro pips. It's just 25 pips. Yeah, I'm just assuming. So let's go back with 25 pips, which is not really significant at all. But anyway, if we go all the way to the 10th of May. Sorry, I'm just trying to find where it is. There we go. Just about there. All right, so 25. Okay, so let me zoom in here and maybe we'll take a look at the last CPI number as a case study. Okay, I'll get rid of 135 for now. All right, so let's block this and I'm going to go into a small time frame so I can find it very, very quickly. There we go. All right, so for this one, we already know what's going to happen, right? But let's just do a bar replay and just cut it off there. So this is what we have before news gets released, right? For the Dow Japanese yen. So what I am trying to look at here is that can we create a few trade orders here that we can do? I guess so. If we take a look at this one here, I think if we find the floor, it's going to be about 135.10. Yeah, about 135.10. So about 135.10, that's slightly lower than the lowest range that we have. Then we have this kind of as the upper resistance. So I guess you can create a buy stop. I don't think I can do that on the bar replay, but I'm just saying right now, if you have if we are looking at the current scenario, so what we want to look at here is that we want to have a sell stop, right? Just below that line there, about 135.10. Or if you want to play it safe, you know, have it at 135, doesn't matter, right? Your sell stop could be 135.10, could be 135. And then for this one here, you want to have a buy stop. Okay, so this is pre-news, right? This is about 2 hours before news happened. So I'm going to replay the chart. Okay. So it triggered your sell stop immediately. Even though it closes down there, your sell stop should be triggered at 135.10, 135. So let's take a look at this. If you have that sell stop, where's your target? I'm just gonna leave the target a little bit open, just in case, right? So once your sell stop gets triggered, your buy stop needs to be cancelled. Okay, it needs to be cancelled. It needs to be cancelled. So yeah, we are gonna just delete the buy stop. So we don't have any more buy stop. Your previous buy stop will become your stop loss. Okay, that would be your initial stop loss. Obviously, if we're looking at this, can we lock our profit to 135? We can. So let's assume we lock our profit to 135, the blue line, just in case if anything happens, if the market goes against me and hit a stop loss, I wouldn't lose anything. But so far so good. The market continues to go down. But yeah, it's really very far. I'm just taking a random number on where it is. You still need to know when to get out, right? But if we take a look at this one here, is there another possibility here for a potential bounce at 134? Potentially, we could see that, right? Really depends if 134 holds or 134 doesn't hold, okay? So that's pretty much it. That's a replay of last month's CPI numbers. So the initial reaction for that, if you don't have a sell stop and you decided to go in, because that's a 76 pips drop, if you decided to go in after you wait for the market to be done 50 minutes in, then you would probably enter short over there, which means your stop loss is going to be really, really far and you don't even know where your target level is going to be. All right. So yeah, from that risk reward ratio, it just doesn't make sense. So no, we're not looking at 250 micropips or 25 pips. We are looking at a 76 pips drop immediately on the NFP numbers. So on the CPI numbers, actually, sorry. Okay, let's go back. All right. So can you trade after the news releases? Yes, you can fade it. You can create a limit order if you want to. Once the news releases happens, you can trade the fade. Someone already asked this. I believe Dio was asking me just now. Can we trade the limit after the fade? Yeah, you can do that. Oh yeah, that's how you actually trade after the news releases. You can use the buy limit and the sell limit after the news releases. Okay. All right. Just a quick test. All news can be divided into two categories. Anyone paying attention? Can you answer that on the chat here right now? What are they? And what type of order is most often used in news trading? And can you use ordinary indicators to trade the news? If you guys can give me an answer on this, that will be fantastic. All right, let's start with the first one. All news can be divided into two categories. What are they? No takers. All right. All news can be divided into two categories. One would be what we call hot, the unexpected news releases, or the scheduled news releases. What type of orders is most often used in news trading? Between the four of them, not high impact or low impact. Hot or unexpected and scheduled news releases. Yeah. Okay. Stop orders. Yeah, I would say the most often used orders type is actually the buy stop and the sell stop orders during news releases. Typically with the limit orders, it takes a little bit of skill to actually use the limit orders, right? You need to know, how a certain price react to a certain level to get that limit orders going, all right? But the most used order type when news releases happen, because we have the consolidation phase, it's going to be the stop order, which is the buy stop and the sell stop. All right, what we're anticipating is that it will break outside of the consolidation phase into a development phase, and then it will end during a termination phase once everything has calmed down. Okay. Now, yeah, you can use limit as well, but limit orders are typically used after news trading. You know, after the news gets released, then that's where limit orders come into play. But be very careful with limit orders, because you need to know, how price is going to react at a certain level. Are there going to be buyers there? Are there going to be sellers there? These kind of things are a consideration that you need to take into if you're placing limit orders. So I would say the buy stop orders, the stop orders are easier to understand. The stop orders are easier to execute. The limit orders, it takes a little bit of skill. I'll be honest. I'm not going to be biased and say everything is going to be easy. No, stop orders are easy. Limit orders take some skill or getting used to be able to use it correctly. Okay. Number 3. Someone answered for sure. Yes. Obviously, you can use any other ordinary indicators to trade the news if you want to. We can read the momentum in the market if you need to know if the market has enough momentum to go in a certain direction after certain news releases. But again, if you watch the outlook today, there's a little bit of a concern going on, right? Because I already have a bullish flag on my dollar index here, just in case. Because if the inflation number comes in hot tomorrow, if the number comes in higher than 4.1%, higher than 4.5%, then it's going to be a boost for the US dollar, because the consideration for the market is that the FOMC might need to hike interest rate. That's going to drive the US dollar. Now, I have a bullish flag on my dollar index. Can that lift the dollar index up? Yeah, it could. So I'm using patterns and I'm using Ichimoku Cloud. So you can use indicators to help out with your news trading. In fact, it is highly recommended that you have that extra knowledge. Okay, the buy stop limit orders, these are just some easy shortcuts if you're not too familiar and you want to experience news trading. You can use the stop orders and the limit orders if you want to. But if you have a much better understanding of the market, if you understand the indicators, if you understand technical analysis better, if you understand fundamental analysis even better, right? Do they help in your trading when it comes to news releases? It does, okay, significantly. Okay. All right, so again, you can use a code, but Team Octa, if you can correct me here, I'm not sure about the validity of this, but I didn't get any info on it, so I think this is still valid. Yeah, it's non-farm 2023, so you can use this to double your deposit bonus. Okay. All right, so we already have that Q&A session, but yeah, what's next? We've got news trading tomorrow, which is trading the US CPI number. This is going to be on the 13th of June, tomorrow. We'll talk about what we're looking at in terms of what the inflation rate is, what is the CPI, what is the core CPI, what's the difference between the two of them, and then we need to do that within the first half hour, and then we'll go into trading the CPI live tomorrow. Okay, so we'll we'll put it into practice what we talk about tonight in terms of the stop orders, the limit orders. These are the tools that we're going to employ tomorrow during CPI number releases. Okay, so with that, thanks for joining in tonight. Good luck with your trades if you have any trades today, but otherwise, I'll see you guys tomorrow for that live CPI trade. Okay, have a great day ahead, evening, depending on where you are. But yeah, I'll see you tomorrow. Thank you all.